morning. We're here to talk about institutional strategies for Web3, and I'm here with El-Baz. I'll let you introduce yourself.
Yeah, sure. Great to be here. It's pretty exciting to be here in Singapore as always. A little bit of background on myself and Hashkey. So Hashkey is the what we like to say we're the number one licensed regulated digital asset player in Asia, because we're licensed in all of a little bit of background noise here, but I'll just move. Because we're licensed in all of Asia's international financial centers, including Hong Kong, here in Singapore, in Tokyo, also in Dubai, in Europe, in Ireland. So from my point of view, I think we're one of the pioneers in actually building regulated business models and building licensed businesses around this new asset class.
So I'm Steve Jacoby. I'm a partner with Clifford in Luxembourg. So obviously in Luxembourg we see a lot of activity and a lot of evolution also in the Web3 space, and in particular the way this is brought into Europe under the new regulations that are coming into place. And one of the things that we have seen obviously over the last years is the evolution from the original DeFi approach to a more institutional approach, and that's what we're going to talk about today. So Ben, what we see, I think is fair to say, is the role of intermediaries is important and has changed from what maybe people looked at initially as a very decentralized model. So maybe can you say a few words about how you see the role of intermediaries in that new world?
Sure. No, I think it's been an interesting development in the market, right? Because a lot of the technologies on day one was focused on disintermediation and decentralization. But I think what you've seen, I think one of the most important things that you've seen over the last 2 to 3 years is, as the technology tries to bring more advantages to the real world economy, is you need this interconnect with the traditional financial markets, and you need the interconnect with traditional corporates if you really want to take advantage of the technology. So I think where you've seen a lot of the headlines to date are firms like BlackRock doing tokenized funds. You see spot ETFs getting approved in Asia, getting approved in the US. You see a lot of that institutional side around asset management. But I think what you're also starting to see is a lot of the licensed intermediaries, the brokers, the exchanges getting licensed in a lot of international financial centers, so they can make it easier for corporates to transact with stable coins or transact back with fiats and interconnect to the traditional banking sector. So I think to me it's just kind of like phase 2 in the overall evolution of how blockchain technology gets integrated into the real world economy through better interconnection to the institutional market.
Yeah, and what we have also seen, I think, particularly in Europe and in Luxembourg in particular, is also native digital issuance, and again, very institutional issuers looking at how to operate this with the support of their traditional service providers, venturing into that new world, and I think also being able to adapt to the regulation, because I think the regulation has now obviously come in to create that environment in which institutional operators can provide the services that they used to provide in the BAU world to all of these new assets and these new asset classes. One of the things that we hear a lot about is tokenization, and from a Luxembourg perspective, there's a lot of talk about the tokenization in the world of capital markets, but also in the world of funds. So how do you see the evolution of tokenization, and then what do you see it bringing over the next years?
No, I think that's that's one of the most interesting and important applications of the technology right now is tokenization of real world assets, which includes financial securities, includes funds, includes a lot of really cool assets. I think we're seeing two approaches happen in parallel globally in Asia, and then also in Europe. Hopefully, in the future in the US as well. But let's talk a little bit about what we've seen in Asia, in our home market, in Hong Kong specifically. When you look at Hong Kong and Singapore as two of the key international financial centers of Asia, traditionally Singapore has had a huge amount of innovation and ecosystem around things like payments and commodities trading, where Hong Kong has really excelled in, and also fund management as well. Hong Kong has really excelled in equities trading and kind of the equities markets. Based on our experience, right? So if you look at Hashkey, we have a licensed exchange in Hong Kong, And what's interesting about the licensing framework in Hong Kong is it actually allows the trading platform to both provide trading of crypto assets, non-securities, and security tokens. So what we've been able to do in Hong Kong through collaboration with the regulator and through collaboration with asset managers is we've actually been able to offer tokenized money market funds on the exchange platform. So right now in the Hashkey exchange app in Hong Kong, you onboard, you sign up, you can deposit Hong Kong dollars, US dollars into your account. You can buy and sell crypto assets. In addition to that, you can use your account to subscribe to a tokenized money market fund, right? Either USD based or Hong Kong dollar based. So I think that's really exciting. I think the way that we've seen the SFC, that particular regulator, kind of deal with the risk management around a product like that is kind of phase one for that particular product is you actually cannot, through our platform, is you cannot withdraw it to a public blockchain. So, I think obviously the biggest benefits from the technology and from tokenizing financial products and tokenizing RWAs come from the ability to potentially use it as collateral in various different financial transactions. But obviously there's some risks that come with that, right? If the asset gets put into a public blockchain and it gets traded around, how do you make sure that you're still taking in, considering AML risks and all these types of things. So I think in the Hong Kong approach also it's not digital native issuance. It's still you have kind of the paper-based issuance and you have it existing in the off-chain world. So it still has some of the inefficiencies associated with the off-chain market structure for issuing those types of products. So I think what I've really liked, and I think what's really exciting about what's happening in Luxembourg is a regulatory framework and a legislative framework that sees the advantage of digital native issuance and is trying to build the regulatory parts to enable that infrastructure. But I think regulators worldwide and also legal frameworks worldwide are still trying to grapple with how do you actually enable digital native issuance and digital native trading, and what do you do with the share registrars, the transfer agents. So I think what Luxembourg has been working on is actually quite innovative.
Yeah, and Luxembourg obviously has a tradition as being a hub for investment funds, and with many sort of institutional operators in the custody business and the trading business, etc. Because when you look at it, once the institutional world goes into these areas, what they need is custody systems, it's trading system, it's trading platforms, etc. So how do you see that evolve from your point of view in Asia and looking into Europe? Is that evolving along the same lines, or do you see differences in approach?
Yeah, I think on the institutional side, right, there's different ways to break it down, right? One, you have what I just talked a little bit as kind of like the funds and asset management ecosystem, the tokenization in that side, and then you have the trading and the markets, and then you also have the payment side, right? So a number of different things happening in each of those sectors. To your question, the sector around trading and market infrastructure, I think what we haven't really seen take off in other regions, but what we have seen take off in a region like Hong Kong, for example, is Hashkey provides a very good right now in Hong Kong, a very good institutional infrastructure that enables securities brokers and enables digital banks to be able to very quickly provide crypto asset trading to their end users without having to spin up their own custody, without having to spin up their own order books and things like that. And actually, if you look at the market in Hong Kong, I think there's about 40 securities brokers that have had their licenses uplifted by the regulator there, so that they can provide trading in this way using licensed infrastructure from Hashkey. In Europe, I think that's also really interesting. That's a really interesting application for us. We've been thinking a lot about how do we potentially create what we call institutional enabler, being able to provide this infrastructure that enables institutions to more quickly get these products to their customers using licensed infrastructure. I think there's still some detail to look into with regards to how MiCA is structured and the regulated activities. If you actually look at some of the regulatory structure in Hong Kong, it very specifically points out this type of business model. Whereas under the MiCA regulations under ESMA, there's you have the broker model, there's the trading platform operator model, there's the custodian model. So there's still some detailed look you have to look at how to implement something like this in Europe. But I think that's something that really excites us is getting to a point in time where when the institutions do want to deliver these types of products to their end users, they're able to deliver it using trusted licensed infrastructure. I think what we still do see in a number of different regulated markets worldwide is even if you are a licensed broker, let's say if you're an institution and you're a licensed broker in Europe, in the UAE, in Asia, sometimes those licensed brokers are still routing the orders to offshore, lightly regulated exchanges. So I think from our perspective, we prefer a model where institutions are able to still provide trading services to their end customers, and then the actual execution venue for those orders is still done on a clean, regulated type of order book. So I think in the trading infrastructure around this is also interesting to see how it's better enabling institutions to trade safely.
I mean, that's certainly one of the advantages of MiCA is that it has created quite a comprehensive system, and it looked at the whole value chain of both the trading and the custody and all of these elements. So I think as it comes into place and that it's being adapted and used, that's really some of the main elements of what is going to develop. Maybe just turning to what the interest of the institutional operators in the Web3 is. I mean, we hear a lot about the speed, the precision of the execution, also the simplification of being able to execute trades on a cross-border basis, etc. What do you see as the main drivers for institutional operators to get into this? I'm sure there's the interest of their clients, obviously, but what are people looking for?
Yeah, sure. I think there's one sector of this is on the payment side. I think with regards to what's drawing institutions to want to have exposure to Web3. I mean, there's different types of exposure. One is actually buying and holding the assets. The other is using the assets to resolve some type of pain point, right? Say as a payment instrument. I think 2025 and late and I'd say 2025 and like second half of 2024 to me was basically the inflection point for B2B stablecoin payments. So as I think what you're going to start to see over the course of this year and even more next year, I mean, you've already started to see it over the last like 2 to 3 months, is you basically have all of the US-based payments players, whether it's Stripe, whether it's PayPal, these guys really focusing on how do they build an offering around stablecoin payments. Because I mean, that use case is, from our perspective as a licensed player, we've started to see more and more corporates, like not necessarily licensed financial institutions, right, but corporates who want to onboard with a licensed company, and they want to onboard the licensed company because they need that stable banking infrastructure, and they're buying and selling some of these products, stable coins sometimes, as a way to manage their treasury, as a way potentially to pay some of their suppliers and things like that. They don't currently today. We don't offer direct payment services, so sometimes corporates come in, they'll make a transaction, they'll withdraw back to their own treasury and handle their own payment operations. But I think that's one of the I think the cross borders B2B payments for stablecoins is one of the kind of the hugest draws right now for some type of corporates. And then obviously on the other side of things, you have the fund managers who are still trying to provide access to this asset class in a safe way to some of their clients.
And maybe last question, we also see the adoption of DLT as technology in some of the more traditional world, particularly around collateral management and also the use for in just to sort of for record keeping, etc. So what's your view on that? How is there an influence from that Web3 world back to the traditional world by simply the use of the technology and the advantages of that technology?
Yeah, I think that's the main thing. If I looked ahead to, let's say 2026, right? I mean, I think one of the biggest things to look forward to is for RWAs and for traditional financial instruments is how do we get to a point where the kind of the full life cycle of some of those products can actually be done on DLT and done on blockchain. I think it makes sense why it's not just 0 to 1 in one day, because there are still a lot of risks to assess, right? How do you deal with the underlying technology? Is it going to get hacked on a public blockchain? Are there AML, KYC rules? So all these different things. I think the collateralization is also one thing that I think will add a huge amount of value to a lot of these assets, because at the end of the day, one of the biggest reasons that people do want to take some of these traditional products or real world assets and tokenize them is for several reasons. One is you have 24/7, in theory you have 24/7 trading, right? So you're not subject to the same bank working hours and bank non-working hours. The other is the ability to actually collateral the asset in order to borrow against it. So that use case is actually quite strong. I mean, we're starting to see, for example, in the product that we offer out of Hong Kong, the tokenized money market fund, we've already started to see demand from clients. So once they actually buy that product and they're earning, yield, a relatively risk-free yield of 4 to 4.5%. They're starting to think about, well, then how do they actually use those holdings to collateralize it for short-term liquidity needs and borrowing. So I think I think those are the two on tokenization of RWAs and also tokenization of traditional financial instruments. I think those are the two big things to look forward to for 2026 is how do you get more of the overall workflow on DLT while considering the risks. At the same time, how do you start to build more collateralization mechanisms for some of these products?
So in terms of bringing this to wrap, in terms of a conclusion, can we say that we see in the next 2 years to come convergence of the traditional world and the Web3 world based on technology and based also on the institutional approach?
I think it's already happening, but I think it will accelerate. Again, I think the big accelerant was I think second half of last year, where you started to see kind of the usages of stable coins increase on a B2B basis. And I think probably one of the bigger accelerants this year, obviously, has been the kind of the Trump administration and the work around the Genius Act. Because if you look globally, the U.S. dollar is still dominant worldwide in a lot of cross-border transactions. So when you get to a point where the U.S. banking industry now, right, when you get to a point now where the U.S. banking industry is starting to become a little bit more comfortable with stable coins, there's a regulatory framework around it in the U.S., I think that's going to open up even more opportunities for convergence. So I think it's already happening, but there's still a lot more to look ahead for.
Great. Thank you very much, Ben. Thank you.
Thanks,